Hi, Hank SixFourTrading. I'm going to go over quickly trader psychology. You know I like to keep things as simple as possible, so let's just jump right into it. All right. So, some of the topics that we're going to cover in this chapter, in this quick overview, is cognitive biases, emotional biases, keys to success, and a winning strategy. What is cognitive biases? By definition, a systematic pattern of deviation from rationality in human thought and decision making. Basically, a rational thought. Some examples of this: holding on to a trade even when it goes against you, convincing yourself that the trade will turn around in your favor, and we know that doesn't happen all the time, and then going against the trend. You've heard the term, the trend is your friend. Tools to overcome this: focus on the objective research and analysis versus the emotional side of it. Utilize tools like technical analysis, support, resistance lines, trend lines, things that we talk about in the foundational KISS series in the description. Charts, economic information. Economic information is things like, are we in a recession? Well, if we're in a recession and you're buying a like Apple or something like that and you think it's going to go up, but you're confirmed in a recession and it goes down, you're going against that economic analysis that you know of, right? Fundamental data. What's the balance sheet look like? How's the company doing? How have they been profiting, right? Fundamental analysis data as well. Emotional bias. What is it, right? The influence of feeling or mood, basically how you feel in decision making. So I'm making my executions on my trade based on my emotions, how I feel, right? And we don't want to do that. I'm going to get a little bit more into that later, to kind of give you some thoughts about how you can overcome that. Some examples of emotional, right? Fear, right? Fear of losing, fear of things of possibly the trade going in the wrong direction, being greedy, right? Having a target, you hit your target, and you say, well, I want to get a little bit more. So you keep going, and it doesn't work out well for you. Euphoria. And then fear of missing out, FOMO. Fear of missing out is different than the natural fear because you're fearing not making a profit by not being a part of the herd that has jumped onto like GME or AMC at that time. And some tools to overcome this, right? Know who you are, know yourself. Need to be self-aware, establish some trading rules, stick to them, implement risk management techniques. These are things that we talk about in the foundational KISS course that we guide you through. And seek accountability and support from your peers and from your mentors. Being a part of a community helps with that. So some keys to success, right? Know your strengths, know your weaknesses. Just know who you are. Know what you're good at, know what you're not good at. Don't trade on emotions. I know you've heard that. That's wrong, right? That's like saying, I'm not human, right? We all have emotions. We all have them. So knowing that what they are and acknowledging them, right? Say, for instance, if you're anxious right now, if someone says, well, you shouldn't be anxious, don't be anxious, then that's all you're going to focus on, right? You're not going to focus on trying to trade better or do better. You're not going to focus on what you're doing in front of you. You're just going to focus on your emotion being anxious. There's nothing wrong with your emotions. If you fight them, that's when they become more prevalent, right? And so accepting them for who they are, accepting those emotions, say, okay, if I'm trading right now and I say I'm anxious right now, but you want to have something in front of you, right? You want to have your trade. I have a trade plan, right? I keep a trade journal, trade plan, trade journal. I keep all of that with me, right? I know everything in this plan. You might want to have a sticky note just up there. You might have a piece of paper. You can have it up on your computer, but have it in front of you so you can refer back to it to say, let me stick to my plan. I know I'm emotional right now, but let me stick to my plan. I got into this trade. I did my risk management. I knew where my targets were. I knew where my entry was going to be, and I knew where my stop was going to be. I'm going to let that trade work out based on my trade plan, not my emotions, right? So yes, you should have emotions because you're a human being. Accept them. Don't fight them, but don't execute on your emotions. Execute on your trade plan and execute on your strategy. So that's a part of accepting who you are. Gain knowledge through self-help literature. So there's a lot of books out there that has a lot of good Atomic Habits. They're not paying me for anything, so I'm just saying. But Atomic Habits is a great book for being consistent, right? Helping you to be consistent with and changing habits into good habits, right? Being accountable to yourself and others. Just be accountable. And then join a community of like-minded traders, like we talked about, like the SixFourTrading community. You can join that community. It's in the description, with like-minded traders that are in the same process of just trying to generate wealth, trying to be profitable, and just trying to be a better trader. What's some winning strategies? First one, develop a personal routine. This is outside of trading, right? If you don't have good habits, like you get up in the morning and you may take a shower, brush your teeth, right? There's a routine there. You may meditate, you may go for a run. There should be a routine in your life, right, that you can follow. And so, but you need to be consistent with it. So all of these things play a role into your trading. If you're not consistent in your life, you're not consistent in the things that you do, if you're not in a routine that you do every day that's positive, then your trading is going to be messy as well. It's just how it is, right? Develop a trade plan. Get, like we talked about, have a plan. Have a plan. Document that plan so you can be referring back to that plan. Even when you have these emotions over here, you can refer back to this plan and say, I'm sticking to my plan, even though I may feel this way. And then respect your stops. You should always respect your stops, right? People move their stops all the time because they think, well, I'm gonna give it a little bit more room and I think it's gonna turn around, and it doesn't. So you lose more money. Respect your stops. Let it stop out. Just don't let that emotion of that fact that it's coming near your stop and maybe. Don't trade on the maybes. Trade on, I have already established my trade plan, my risk management says my stop goes there. I'm going to leave my stop there and just let it do what it's going to do, right? The last thing is journal your trades. Journaling your trades does two things. The first thing it does, one, it keeps you accountable, right? Two, it allows you to refer back to older trades that may have been winning trades, and you can look at what you did, how you felt, because something else that you should journal is how you feel when you were in that trade. Those are things we talk about in the fundamental foundational KISS series that we have as well in the description. But journaling your trades keeps you accountable. And so you want to be able to say, you know what? I had like 12 trades that were successful and I did this. And well, this time I didn't do that, and this is what happened. So let me go back to doing what I was doing before on the next trading day so I can be successful. So these are some quick overview of trading psychology, some of the tools you can look at and try to execute. But ultimately, if you want to get a little bit more of this, you can jump into our SixFourTrading community. But I'm Hank, SixFourTrading, and I appreciate you guys for listening to this, and I hope it helps you. Take care.